Good afternoon, everyone, and welcome to LoLo's third webinar of 2014. Our series this year is Insurance by the Numbers, focusing on a different number each month from 0 to 10 and how those numbers impact your clients in the insurance world. This month, we focus on the number 2, with the 2 health conditions that will get your clients declined for life, LTCi and DI. Our presentation today will last between 50 and 60 minutes, and you must be logged on for at least 50 minutes from the email address you registered with to qualify for CFP-CE credits. If you have questions as we go along today, feel free to ask them on screen, and don't worry, we won't be calling out your name as we reply to them. And we'll do our best to answer them timely, or we'll get to them at the end of the presentation. Today's webinar is being recorded, and it'll be posted to our website within a week. Your presenter today is Peachie Thompson. Peachie is our Director of Underwriting and is an AALU, ALMI, and ACS. That's a lot of letters, so it's a good place to tell you that she's great at crafting letters to insurance company underwriters that detail your client's particular situations, which often results in better rate classes. She joined LLIS in May of 2012 after spending 14 years with some of the nation's largest insurance agencies in positions like Director of Underwriting and New Business Director. Her knowledge about training, solutions, reporting and analysis, client services, and technology are making the insurance application process smoother, easier, and faster for your clients with tools like e-applications, which we implemented last year. Please welcome Peachie Thompson.
Thank you, Dina. Good afternoon, everybody, and thank you for being here today. Today, I will talk about underwriting and also give you some helpful information that could help you in your practice as far as underwriting is concerned. Have you ever had to break very bad news to someone? If yes, then you know that it's unpleasant. It's hard. You would rather be delivering good news or no news at all, right? Underwriting decides whether someone can get insurance or not. Part of my job as an underwriter is to convey these decisions to your clients. And as much as I would love to just deliver good news, there are times that I must do otherwise. Today we will talk about reasons your clients can get declined for insurance. We will start with an overview of the underwriting process. I will show you some of the tools that insurance companies use to evaluate risk. I will also share tips with you on how to navigate through underwriting properly and also show you the differences between life, disability, and long-term care underwriting. So what is underwriting? Why should you pay attention to it? By definition, underwriting is the process of risk selection. An underwriter's ultimate goal is to discern what risk is acceptable and what risk is not acceptable to the company. Pretty easy, but why is it important? It is important because it has a direct effect on what and when benefits are available to your client, and ultimately, how much an applicant must pay for a particular policy. In other words, underwriting dictates cost, making underwriting a very critical phase of the policy acquisition process. Now, you should know that when it comes to underwriting, different products have different traits, calling for different sets of strategies and varying drivers. Take a look at our first example, permanent life insurance such as whole life, universal life, guaranteed universal life, and survivorship universal life, or PERM, are forgiving. When it comes to PERM, underwriters are able to apply liberal guidelines. They can utilize healthy lifestyle credits or points to bump up an insured's risk classification, which means there's a little room for negotiation which means we can get your client a better rate. Disability insurance is focused on morbidity rather than mortality. Think of it this way. What are the chances of an applicant filing for disability because of a back injury? And what are the chances of him dying because of the same back injury? He is likely to get disabled than die because of that back injury. Wouldn't you agree? In addition, disability insurance focuses on financial justification, how much your client makes, and occupation classes, which I'll talk about in a little bit. Now, long-term care focuses on our middle-aged clients. In addition to health history, underwriters are interested in the applicant's lifestyle. Can the applicant take care of himself? Does he need help performing the activities of daily living that we young ones tend to take for granted? Activities of daily living such as bathing, dressing, toileting. Underwriters also look for the applicant's intellectual capacity, such as memory, attention, comprehension, and judgment. All of these must be acceptable. Now, for term insurance, underwriters are seldom able to apply liberal guidelines or lifestyle credits. They use strict guidelines to classify a risk, which means there's very little or rarely room for negotiation. The last on our list is annuities. This is my favorite. When we talk about annuities, you get to call Jerry Scapiat. Now, as an advisor, I imagine that having some knowledge of your client's health impacts your entire planning process. Guess what? Underwriting gives you that invaluable insight without breaking any HIPAA rules or regulations. And because every product is different, it's very important for you to work with an agent who is knowledgeable about the different types of insurance. That being said, why should you, as their advisor, care about your client's health? Well, because it's not just about insurance. It's not just about insurance matter. It's life planning matter, because life expectancy will drive their planning. Here's the recent example. I got a call from an advisor a few weeks ago. His client, a 62-year-old successful male, has Parkinson's disease. He'd like to know if he could get life insurance. It was not a mild form of Parkinson's, and unfortunately, the answer in that case was an easy no. If you have clients who have this type of condition, you and I both know that it will affect their ability to take care of themselves. The cost associated with their health skyrockets. Adaptations like ramps for their homes will be necessary. Sometimes their spouses end up taking on more responsibilities, both for their care and financial wellness as well. As Keith in our office says, and I quote, "If your client has one foot in the grave and one foot on a banana peel, you as their advisor need to know that." Well, I know that you will agree with me that by knowing their health and their history, you can help them better prepare, plan for their futures. So make sure you work with an insurance agent that can help you and ultimately help your clients determine what type of coverage they can qualify for and what best suits their needs. At some point during the process, you should be able to get some of the preliminary underwriting health questions, such as what you're seeing on your screen right now. You as the advisor have the option to get this information from them, or you can have the agent that you're working with collect it from them. It just depends on your comfort level. At the end of my webinar, I'll share some resources with you, including where you can find a preliminary health questionnaire. Make your life a little easy. It's not a secret. A life insurance quote is at best a guesstimate, and navigating the underwriting process is more art than science. Look, the life insurance industry is behind when it comes to technology. within the core of every insurance company sits good old-fashioned underwriting. What does that mean? It means that it still greatly relies on warm, complex, and sometimes illogical human beings with feelings, emotions, and the freedom to make decisions. And as you know, while guidelines exist for risk to be classified, they're meant to be just that, a guide. Some underwriters choose to remain within their comfort zones, while some are gifted with the ability to think outside the box. And that is where the art of underwriting begins. Here's the map of our journey for today. We'll kick it off with preliminary, and I'll take you all the way to stage 5, which is in force. It's important to note that this whole process can take around 6 weeks to several months. Just depends. Anything before or after that is simply an exemption. Let's get started with preliminary. Preliminary is a stage where you're building the foundation, gathering all the required data. You're doing field underwriting. Basically, you're screening. You're providing initial quotes. Now, if you were shopping or researching something, what would you do? Where would you go? The library? Would you ask your spouse for guidance? Your in-laws maybe? Friends? Go to Facebook, YouTube? Oh, maybe check out with a professional. In this day and age of having everything readily available to us at a swipe of a finger or a click of the mouse, most people will go on the internet and find quote engines such as this one. Let me tell you about this website. So say your client, Jim. Jim decided to go to this website and get himself his own life insurance quote. This website asks him for some basic information such as date of birth, height and weight, where he lives, and some basic health questions. Now, while this page asks for some health information, it can't capture them all. There's things that are missing, things that are very critical when it comes to life insurance or even long-term care or DI underwriting. There's things like strokes and apnea, liver disorders, kidney disorders, stomach disorders. Just simply don't have it. So anyway, he enters the information on this website and he hits enter. And he gets this quote. He's asking for $2 million of 20-year term. The website gives him a quote for American General for $72.36 per month, Genworth for $72.63 per month. Now, as an underwriter, I can tell you that this website is inaccurate. And I would like to show you why I think that. So let's pretend that Jim calls me and asks me for the same quote he got from the website he just went to. Here's how our dialogue will go. Hi, Jim. How are you? Hi, Peachie. I'd like a quote for $2 million of 20-year term. So I asked Jim, all right, well, tell me about your health. Peachie, I'm in perfect health. I don't have any medical conditions. I am just a runner. I do all kinds of exercise. It's awesome. We like perfect health. With perfect health, we can quote you the best class, which is Preferred Plus. In this example, SBLI will give you $67.86 for Preferred Plus. Now, remember that website that you went to? They quoted you $72.36 with American General. Well, there's a couple of things there. That quote engine apparently did not update their software because really, when we ran this quote and we did an actual quote, American General's pricing was revised, and it was actually $70.35 at that time. In any case, you're still Super Preferred or Preferred Plus. I can use that interchangeably in this example. But I don't stop there. I keep talking to Jim. Jim, tell me about medications. Do you take any kind of medication? Yes, I do. I'm taking high blood pressure meds. Oh, okay. Well, the good news is SBLI will still give you Super Preferred or Preferred Plus at $67.86, even if you're taking high blood pressure meds. American General, you're disqualified. But I keep talking to Jim. So tell me about your family, mom and dad. Oh, your father died of a heart attack at age 58. I'm so sorry. That changes our landscape quite a bit. You no longer qualify for Preferred Plus, and most insurance companies won't give you Preferred. But good news, Columbus Life will give you Preferred for $104.55. Now, if you went with that website that you went to earlier, you wouldn't apply with American General. And yes, you would have been approved, but at Standard Plus, which means you'd end up paying $121.10 instead of what they originally quoted you. So $104.55 versus $121.10, well, that's $4,000 over the life of the policy. I can think of a lot of things to do with $4,000. All right, tip number 1, truth can set you free. Providing your client with an educated and honest quote is equally important as providing the underwriter the proof that the quote is accurate and fair to the insurance company. Effective preliminary underwriting is crucial to satisfying this need. We demonstrated that with our previous example, did we not? We'd like to ask questions. And transparency, transparency, transparency. Just like in real estate, where location, location, location are the 3 most important factors. When we talk about transparency in this case, we mean that your clients have to tell their insurance agents everything. And I mean everything as far as their health is concerned. Why is that so important? Well, it can actually be the difference between them taking a policy and declining it. Think about it. If your client fails to disclose a detail, the final quote they see may vary greatly from their original quote. So what happens then? Sticker shock. Also, think about what the underwriter thinks about someone who gives false information or omits critical data. I can tell you that the last thing that you want is to get the underwriter to that frame of mind, questioning your client's integrity, wondering what else could be out there. We don't want that. Now, the careful manner in which a case is handled is essential to helping the underwriting say yes to the best possible rates for your clients. But how do you ensure that your case is handled properly? How does an effective pre-underwriting process look like? Let me give you an idea. First, your quote request should be reviewed by a product specialist. That product specialist should be able to look at various carriers' guidelines because carriers have varying guidelines, and some are more liberal than others. Next, that agent should also have an in-house underwriter or access to an underwriting, especially for cases that are more complex. The underwriter should be able to personally interview your client to have a detailed conversation about his or her medical condition. This underwriter should also have the ability to read and interpret medical records, or simply ask the right questions. Last but not the least, the underwriter should be able to study the underwriting matrix and discern which carriers or carrier is best suited for the job. Different carriers have different strengths, and those strengths change from time to time. It is the insurance agent's job and the underwriter to hit that target for your client at the right time, as you just saw in our example earlier. Now, if necessary, a good agent will also anonymously negotiate with insurance carriers before giving you or your client the quote. And once your client is ready to proceed, he should have an in-depth phone interview with a case manager. And what's the case manager's role? The case manager's role is to ask very specific medical questions, put the paperwork together, order the insurance exam for your client. Manage the case from start to finish. Make sure that you are kept in the loop. After the case manager speaks with your client, there should be a second review of the file by either the product specialist or an in-house underwriter. Nobody likes surprises, especially bad ones, right? If the agent follows a process similar to what I'm sharing with you today, you and your client should get an educated and realistic quote. Tip number 2, timing is everything. Knowing when a carrier relaxes or tightens their cigar smoking guidelines can be the difference between a smoker rate and a non-smoker rate. Did you know that insurance companies have so many variations of classifying tobacco use? For starters, they have different definitions of tobacco. Really, how else do they make it so complicated? One company may not think of cigar as tobacco use, while the other insurance company may classify one cigar as tobacco use. And you know what else? The amount and frequency of cigar use could mean the difference between smoker rates and non-smoker rates. Generally, with most insurance companies, someone who smokes one cigar per month may get non-smoker rates. If you smoke more than that, then you're a smoker. It all depends on what the lab shows as far as nicotine in their specimen. If you have a guy that just quit using tobacco, know that the insurance companies take into consideration the last time tobacco was used. Generally, the farther your guy is from the last date of use, the better. Okay, sorry about that. We had some technical difficulties with my microphone. Pending stage is the second stage. This is when we formally submit the case to the insurance company. Tip number 3, proceed with caution. Insurance companies can choose to retain risk or use reinsurers to share or transfer risk. Reinsurers are simply insurance companies who insure other insurance companies. In turn, reinsurers can do the same by utilizing their retrocessionaires. Retrocessionaires are reinsurers who insure other reinsurers. What, you should ask me, is the importance of all of this? Well, imagine your client applying for insurance with 5 different insurance companies. This is how it looks like. Insurance companies share reinsurers, reinsurers share retrocessionaires. And due to the shrinking number of reinsurers and retrocessionaires, there's a good chance that ultimately an application is seen by the same underwriter, but from various sources. And you know what? Being seen by the same underwriters from different sources is not a good thing. So why take a detour when you can take a more direct route? As an advisor, you want someone who knows exactly how to navigate through this matrix. You need someone who knows exactly where to dot the I's and cross the T's. So, how do insurance companies evaluate risk? First, they look at your client's health history. They also look at their family history, lifestyle, and even their finances. Health history gives them basically a health profile of your client. The healthier the client, the better the rate class is. This is true for life, long-term care, and DI. Family history. When it comes to life insurance, family history of heart disease, diabetes, and cancer are all taken into consideration. The type of disease, the age of diagnosis, or death are all critical information. Why is that important? Some diseases are in your genes, and there's nothing you can do about that. Lifestyle. For life and DI, pilots, scuba divers, mountain climbers, and those who participate in hazardous sports are considered higher risk individuals. For long-term care, the ability to do certain things to take care of ourselves is very important. Travel. Travel for life insurance, when, where, and how long your client travels outside of the U.S. is taken into consideration. That also depends on where they live. Different states have different guidelines as far as what's acceptable, what information is okay for insurance companies to use as far as travel is concerned. For disability insurance, regular international travel for business is taken into consideration. Long-term care, not so much. Finances, why do they care about salary, assets, liabilities, net worth? For life insurance, homemakers are given values based on their spouse's financial information. Basically, the insurance companies don't want someone worth more dead than alive. And on the disability insurance side, it has an extensive financial underwriting that greatly affects policy design. Now, suitability is important for all three. You know, can the client afford this? Is this good for the client? But bigger emphasis is put on long-term care when it comes to suitability. Tip number 4, you can't change the hand that you're dealt, but you can control how you play the hand. Anyone who plays poker knows that. In the life insurance world, a certified scuba diver with no future plans of diving can get offers ranging from best class to standard. So, knowing when and where to send a case translates into the lowest possible cost. I co-founded an advanced underwriting group back in 2004. It's a group of advanced underwriters where we shared and learned advanced underwriting techniques. But no matter how advanced the topic was, it always boiled down to one question. It goes something like this. Hey, Peachie, I got a guy. He has some sort of disease. The next question that follows is, do you think Preferred Plus is equitable, or should we give him preferred or standard? These are risk classes, by the way. And my answer to that question is, well, which manual are you using? Manual A may give a scuba diver who dives up to 50 feet on vacation best class, while Manual B may give the same scuba diver select class, which is like the third one down. Again, knowing when and where to send a case translates into the lowest possible cost. All right, so what are the common tools that insurance companies use to evaluate risks? Imagine you're the underwriter and you're underwriting your friend. See the friend next to you. These are the items that's available to you. Now you're pretending you're the underwriter. The application form. The application form contains information about the applicant. Basic information such as name, date of birth, social security number, driver's license number, where they live, where they work, how much they make. It also contains the information about what they're applying for, the type of insurance. Is it term? Is it DI? Is it long-term care? How much insurance they're applying for? $1 million? $250,000? It also gives you the design of the policy. Who owns the policy? Is it the insured? Is it a trust? Who's the beneficiary? Is it the spouse, the kids, a trust, or a charity? Application form gives the underwriter that information. So pretend you're the one that's underwriting. Now you know who your client is on paper. What you want to do next is learn about their health. Because remember, we want to paint a picture of the client's health. You get that by reviewing what we call the Part 2 or medical exam. The insurance medical exam contains health information about your client. Everything. Cardiovascular, renal, everything. It also contains family history. Now that you know your client's family history, now you're still the underwriter. You know the client on paper. You got some medical information, including family history. You want the insured's or proposed insured's body to talk. And how do you do that? Well, you get the lab work to tell you. Lab work and or EKG results are also available to underwriters. And at some point during the underwriting process, we'll send a paramedic out to your client, and the paramedic will get a blood and urine sample from your client. The paramedic will send that blood and urine sample to the lab, and the results, bam, are available for the underwriter's viewing pleasure. Lab work will tell an underwriter, you are the underwriter in our example, if someone is HIV positive, if someone is a smoker, a drug user, or if someone has elevated liver functions or high cholesterol or a diabetic or pre-diabetic for that matter. Now your friend that you're underwriting, you now know him on paper and you got his medical information on the exam and you got his lab work, you had his body talk to you. You want to go ahead and get more information about his health. How do you do that? You as an underwriter would go ahead and get medical records. The medical records will give you very specific information. You can read all kinds of medical reports such as echocardiograms or pulmonary function tests that's available to support what information was listed on the insurance exam. Now that you know that, underwriters tend to ask more information. And you want to make sure as an underwriter that that person on paper, on the application form, is exactly who he says he is. You can do that by an interview. That interview can be done by telephone or it can be face-to-face. Sometimes, most of the time, insurance companies use third-party vendors to do that interview. Now, doesn't underwriting remind you of dating? Think about it. When you were looking out for the one, you essentially had or have a list of things that you want this person to be or have. But more importantly, you had a list of things that you do not want this person to have. I won't tell you how I picked mine out. Similar idea in underwriting. In order for someone to qualify for insurance, they must meet the insurance company's requirements. Just like someone must meet your requirements. That being said, so okay nowadays, right, when you're dealing with a prospective mate, what do? You go on the internet to research this person, some of you will. You talk to his or her friends. You might even have someone run a background check on this person. Now, insurance companies have something similar that they do. In addition to the tools that we just talked about, that you did, underwriting your friend, your imaginary friend, they also have access to additional information, such as what you see on your screen right now, prescription database. Prescription database gives the underwriter a person's 5-year prescription drug history. What do they see? Carriers see the prescription name, prescribing doctor, dosages, and frequency of refills. Medications are simply color-coded. Think of it like when you're driving. You get a stoplight. When you see green, green means it's good. You can keep on going. That's the same thing in underwriting. Green medications such as antibiotics like Z-Pak or amoxicillin are green medications. An underwriter sees that. Just like when you're driving, you see green, you keep on going. Underwriter sees green medications, he or she keeps on going. Orange medications such as insulin, Coumadin, or blood thinning medications, or even anxiety medications, signals caution to the underwriter. Again, just like when you're driving, it depends on where your position is. If the closer you are to the light, maybe you're accelerating to get to the other side, or hopefully you're slowing down if you're far enough. Same thing in the underwriting. That means caution. Red. When you see red medications like Aricept or any medications for senility or Alzheimer's, that's a hey, stop. Hopefully when you're driving and you see red, you're stopping, not trying to beat that red light. It's the same idea in underwriting. Underwriters see these kinds of medications, they stop. Those are usually decline medications. Now, MVR or motor vehicle report. MVR shows related citations, license information, and delinquent child support payments. Basically, insurance companies consider the last 5 years in their risk assessment. Now, this is very important for clients with DUI or DWIs. And even those clients with sleep apnea. Yes, underwriters are very interested to know if clients with sleep apnea are falling asleep behind the wheel. Think about it. High risk. Medical Information Bureau, or MIB. MIB is a confidential exchange of underwriting information among life insurance companies. It was basically formed as an alert against fraud. And I quote this from their website. To utilize MIB, an insurance company must be a member and subscriber of the MIB. Basically, all it means is that insurance companies are obligated to report anything, anything that affected their decision. This is best described if I tell you a story. I got a guy not a long time ago. This guy decided that he wanted $1 million of insurance. Different insurance companies have different guidelines as far as underwriting requirements are concerned, but generally, the older you are and the more insurance you're applying for, the more requirements they will ask. The less amount of insurance you're applying for and the younger you are, the less requirements they will ask. Now, this guy knew that if he applied for $99,000 with 10 different insurance companies, the guidelines of those insurance companies dictate that they will not need to get his medical records. Clearly, he's hiding something on his medical records, and he figured it out. He did the math, 99,000 times 10, get me to 1 million. Close enough, I will do it. He goes ahead and applies for 10 different insurance companies, 10 different agents. One of them was us. We didn't know that at that time. Well, as an underwriter, the first thing that you do as soon as you get this application is you perform an MIB check. What does that mean? You go on MIB and you put a little code that says, so-and-so applied for insurance. That's the code. So the first underwriter did just that. That's protocol, standard protocol for underwriters. The second underwriter did that as well. Went on MIB, saw that there was a first application. The third application did that as well. Went on MIB, saw that there's 2 existing applications. The fourth underwriter did the same exact thing. So saw that there's 3 different applications. The 5th, the 6th, the 7th, the 8th. And what did you think the 9th underwriter thought when he saw this? That client was declined. He was trying to commit fraud. That was essentially fraud. And he got declined across the board. That's what MIB is for. That's what MIB is all about. Now, Consumer Reports. Consumer Reports alerts underwriters against criminal activities. It also provides court records or credit reports. Now, this requirement is very rare. It's usually done for jumbo cases. We have a question. Can one get blood tests before applying to insurance company to see where they stand before application and underwriting? Of course, you can get yourself tested by your own doctor and have them run an HIV test. Also, the usual blood panel like a CBC, your liver functions, your A1C level, your sugar levels, or your PSAs. It's a good idea to do that, so you know that there are no surprises. Very good question. Thank you. All right. Now, this may all seem a bit overwhelming, and you may be thinking, wow, I don't expect all of these. My client don't expect all of these things, Peachie. Well, here's a quick glance of the step-by-step process your clients will go through. There's a complete version that I will share with you at the end of today's webinar. Tip number 5, MIB, Men in Black. No, perhaps we should get your MBR to check for DUI. Speaking the underwriting tongue is critical, it's crucial. Understanding medical conditions, lifestyle credits, and carrier niches are essential when it comes to risk class negotiations. I got a story. Me and my sister recently visited Thailand. I love to shop. We were shopping for a dress. I found this $20 dress. It was gorgeous. I wanted to pay $10 for it. I'm an excellent negotiator, so I figure, why not? I'm going to go and tell this lady I want to pay $10. Well, I don't speak Thai. My sister is fluent. She's fluent when it comes to speaking Thai because she studied in Thailand and married a tie. In any case, so I was talking to the lady with signals. I was trying to give her $10, and she kept shaking her head. No, 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 no. She kept telling me no, 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 no. I take out my calculator, I type in 10, and I give her the money, and she kept shaking her head. No, 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 no. I was so frustrated. I signaled to my sister, I need a little help here, sis. She talks to the lady and tells her something that obviously I did not understand. The lady looks at me, she looks at me, and my sister said, hey, give me $5. I hand my sister the $5. She gave me the dress. Speaking the underwriting tongue is crucial. So, life insurance, disability insurance, long-term care insurance. What's the difference in underwriting? You should ask. Let me introduce you to the 5 I's of long-term care. These 5 factors are unique to long-term care insurance. As you can see, long-term care is all about intellectual capacity and the physical ability of the client to take care of himself. When it comes to the I, occupation is the primary factor in determining the client's policy features and premium rates. Occupation classes are assigned based on the requirements of the job and the risk that the job poses to the applicant's health. While occupation determines policy features and premium, income is the main factor used to justify the amount of benefits your clients could get. So, disability insurance, in addition to health, focuses on occupation and income. Compared to life insurance, these are the factors that are unique to long-term care and disability income, respectively. After your client goes through the pending stage, we get to the part where they get approved. It's called the approved stage. Once the underwriter makes a decision, your client is approved and given a risk classification. Here's a list of those classifications. Basically, the top ones are what I would call the Superman or Superwoman rate. The bottom part are the uninsurable. Tip number 6, beauty is in the eye of the beholder. The way a case is presented to an underwriter makes a huge difference in the way an applicant is perceived. Think about it. Would you rather be application number 001-001-0099 or healthy Bob, loving husband, father of 3, and hardworking manager at a successful financial firm? You want someone to tell your story. Let someone be your advocate. Now, here are some of the things that can get you or your client declined. Unfortunately, if you have someone with AIDS or Alzheimer's, they're automatically declined. So how do you get declined for life insurance? There's many different ways. Let me tell you a personal story. I was pregnant not too long ago. When I was pregnant, I was having a healthy pregnancy. Was I uninsurable? No, just because I was pregnant does not make me uninsurable. Somewhere along the way, my body decided that it was going to get gestational diabetes. Was I uninsurable? No, but I was considered diabetic. So I was technically postponed, or I postponed myself because I personally did not want to pay diabetic rates. Now, 4 years ago, I was pregnant with my first kid. Again, I was running around and I was normal. And was I uninsurable? No, I was not uninsurable because I was pregnant. But my last trimester, I developed something called pre-eclampsia. Pre-eclampsia is where your blood pressure spikes up. That I was automatically declined. As soon as I had pre-eclampsia, no insurance companies would touch me. I was flat out declined until I delivered my baby, and 6 weeks later I was insurable again. So that's an example of a flat out postpone. We at LODO, we do pre-underwriting, and usually when I do it, like I did to myself, I don't suggest to go on if I know that somebody's going to get declined. Here are some of the reasons someone could get declined for life insurance. BMI, and I quote this, body mass index is defined as weight in kilograms divided by the square of the height in meters. You know, to simplify, BMI is basically build. and it's an excellent relative indicator of someone's overall health. The alcoholic who continues to drink is not eligible for life insurance on any basis. AIDS, Alzheimer's, these are the two conditions that will get your client declined for life insurance. How you get declined for long-term care? Parkinson's. Parkinson's is a syndrome characterized by tremor, muscle stiffness, or rigidity. It usually starts between the ages of 40 and 70 years and progresses steadily over the years, eventually causing severe physical disability. I quote, "The incidence increases with age. It affects one person in 1,000, and in those over 60, 1 in 100. Again, AIDS, Alzheimer's are two conditions that will get you declined for insurance. Disability insurance, depression is a major cause of disability. It is also associated with physical disorders such as stroke, dementia, and other neurological diseases. It also increases morbidity because of other conditions, because it also impairs rehab. Again, AIDS, Alzheimer's are the two conditions that will get you or your client declined. Now, I assume everyone pretty much know what AIDS or HIV is all about. You might ask, what is Alzheimer's? Alzheimer's is a form of dementia where an involuntary development of a plaque in the brain can cause nerve damage. What it does, it leads to decline in cognitive and motor functions. Basically, there's severe loss of intellectual function. The dementia is usually progressive and insidious. The earliest symptoms are failure of memory, especially for recent events, and decreasing efficiency at work or at home. And I quote, approximately 70% of people with dementia have Alzheimer's type dementia. It is the 5th leading cause of death in the U.S. for individuals 65 or older. Early onset Alzheimer's disease is more likely to be hereditary. Tip number 7, nobody likes surprises. Now, providing underwriters with critical information in its entirety is crucial. It's very crucial to establishing an applicant's credibility. I got a guy once whom I interviewed, so I asked him very specific questions. I like specifics, so I say, do you currently use or have you ever used tobacco in any form, including cigars, cigarettes, chews, nicotine patches, nicotine gums, pipe tobaccos? And he said, no to all of these. Okay, so we proceeded to the next step. He went to the underwriting process. After all is said and done, I got his lab results. Guess what? His lab results tested positive for nicotine. And you could only imagine how our next conversation transpired. One or both of us had some explaining to do. Think about it. Think about how hard it is to earn someone's trust and how easy it is to lose it. It's the same idea. Now, when it comes to underwriting, each case is so unique that it's almost impossible to put a blanket statement on a given impairment. So let's keep that in mind as we look through these next few slides. Life insurance focuses on mortality. As you can see, it's illustrated by this slide. Long-term care focuses on morbidity and the ability of a person to take care of himself, while disability focuses on morbidity as well. Let's take a look at those three. Again, life insurance, mortality. Long-term care, DI, morbidity. This slide gives you a great picture of the underwriting differences between these three products. As you can see, Alzheimer's, AIDS, these are the two conditions that will get you or your client declined for insurance. Now, an application turns into a policy once it's in issued stage. A policy is printed and delivered to your client. Tip number 8. Time is money, friend. And by this, I mean two things. First, recognizing that the client's and your time, the advisor, is valuable. Understanding that underwriter's time is valuable as well. So what does that mean? It means that submitting a complete application package to the insurance company reduces the number of times the underwriter needs to review the case, helping them make sound decisions more quickly. It eliminates the need to go back and forth asking for questions, to review the case several times before reaching a final decision. And next, your client's insurance agent should not disappear once the policy is sold. There's a term called reconsideration. If an underwriter's decision today is not favorable, all is not lost. For example, our smoker from tip number 7, if you remember him, he can get better rates a year later if he's nicotine-free. A client who may have been rated or who had exclusions put on their disability income policy because of certain conditions may be eligible for lower rates in a year or so. It just depends. Once a policy is issued, your insurance agent should perform some sort of quality assurance check to be sure that the policy details are accurate. When the policy is issued, that's the time when your client is asked to write a check to pay for the policy. There's also delivery documents that must be signed before the policy can be put in force. So don't break out the champagne yet. Once a policy is issued, it's not in force yet. It needs to be paid. Long-term care, oftentimes, premiums are collected at the beginning of the process. So that's kind of an exemption to the rule. Okay. It's important to understand that just because the policy is issued, again, does not mean that it is in effect. As part of the delivery process, forms must be signed and returned to the insurance company along with the money before the policy becomes effective. Let me share a story with you about a young, successful woman that I underwrote many years ago. So this person was approved super preferred. But because she was so busy and that was not her priority, the policy we delivered, it was issued. She got the policy, but she let it sit on her nightstand for about 2 months. Within that 2 months, she decided to see a doctor, and just because of allergies. Now, the doctor asked for some MRIs of the head because they wanted to see how her sinuses were doing. Well, when the MRI results came back, guess what? They found a tumor right smack in the middle of her head. It was a pituitary tumor. It's the best kind of brain tumor that you could have, if we can say that way. Now, this person, do you think we could place a super preferred policy? No. Because she saw a doctor and they found something out, and she did not pay the policy when it was issued. Now, that offer is off the table. Luckily for this person, we were able to insure her later. She was postponed in the beginning, but a couple of years later, we still got her some insurance. But that super preferred is no longer. It became a collector's edition that she never got. We are now at the last stage. In force is when the policy is in effect. Again, it's not in force until the insurance company has the first premium. Tip number 9, let's make peace, not war. In intelligent collaboration with underwriters to improve unacceptable initial offers is just as important as knowing when not to push. Why? Because it's key to preserving critical relationships at the carrier level. It ensures greater results for the benefit of the client and future clients. It's all about relationship. I used to work for an insurance company that's sales-driven. I had about 2,000 insurance brokers that came to me. Every time the case that I got an approval for was not super preferred, they knocked on my door. They wanted super preferred. Peachie wants super preferred, even though the client is really a standard or substandard class. You know what? What does that do to underwriters? What do you think that does to an underwriter if you keep knocking at her door? Underwriters are just like the rest of us. They get annoying. All right, now that you've learned a lot, let's do a case study. Our first case study is Carrie. She's age 32. She wants $1 million of term 20, 5'3", 205 pounds, non-smoker, history of elevated cholesterol and taking cholesterol meds. Takes lisinopril for hypertension. Mom died of breast cancer at age 59. What's the best class she could get? What do you think? You're right. She can get standard because of her build. Take a look at that again. 5'3", 205 pounds. It doesn't matter if her mom died of breast cancer at age 59 because she is overweight. That trumps the breast cancer. The build is what caused her to be standard. Remember that term that I talked about, reconsideration? We can remove exclusions such as mental nervous, increase benefit period up to age 65, or add riders for DI. For people who just quit smoking, depending on the time, we can get them non-smoker rates. Let's do a case study of that reconsideration. Let's take the same lady. Remember, we got her standard because of what? Because of her build. Now, 2 years later, she's older. She's no longer taking cholesterol meds. Cholesterol controlled by diet and exercise. And she lost a lot of weight. She did a lot of P90X, 120 pounds. What do you think can she get? Super preferred. You're right. Tip number 10, fireworks in the sky. An underwriting expert in harmony with a product expert can produce the desired results for your agent, for your client. Ask yourself this, what is it really that is our ultimate goal? What is our desired result? Well, the product needed is obtained at the best possible cost. That's what we want. All right, here we are at the end of it. If you come up with any more questions, please go ahead and type them now. We'll get to those in just a moment. But for now, I'd like to share some information with you that's specific to low-load insurance services. Did you know that we will see you this May at NAFA, Garrett in August, and again in October? You can also follow us at Twitter. Here's what makes us different. Go ahead and sign up for Mark's term layering webinar next month. Here's also something that you can see, number 4 there. Like we talked about earlier in this presentation, with the rating removals, we follow up with your clients. Like the step-by-step guide, I will show you right here. Now, this may seem a bit overwhelming, and you may say, wow, this is a lot. Go to our website under Advisor Tools. This brochure says applying what to expect. You'll see it. It'll help you. What else is different? You know, we proudly sponsor NAFA, NAFA Genesis, Garrett Planning, ACA. And just last week, we became the national sponsor for the newest planning organization, the XY Planning Network, whose focus is on advisors who work with Gen X and Gen Y clients. We're so proud to support all of you fee-only advisors. Now, AIM is our proprietary notification system. This is our way of keeping you in control. Some of you have seen this. For those of you who don't, it basically shows you step by step what happens during the underwriting process. Questions? One question. I could not hear the category you said are the red meds. Please repeat at the end of the webinar. The red medications are Alzheimer medications or any medications for senility like Aricept. Those medications will get your client declined. Can a life insurance policyholder who is rated standard at the time the policy was issued get re-rated later if their health improves greatly, or should they surrender the policy and just start over? Anyone who has improved health can get re-rated. We call it reconsideration. So like my example, the non-smoker person, or the smoking person, if he quit smoking, we can get him non-smoker rates later. Our lady example who lost weight, a couple of years later, she went from standard to super preferred. So yes, the answer to that is yes. I'd like for you to not surrender the policy until you have the replacement in force, however. Where's Peachie in the picture? That's right. That would be me next to Mark. That's Mark, the tall one. I'm the lady in the blue. Taken after I had my baby. Can a recipient of alimony get life insurance on the payor? Can the recipient of alimony? Yes. Yes. We get a lot of those. And thank you. You're very welcome. Thank you so much for attending this webinar. If there's anything I can help you out with, please, my information is on the screen. Please feel free to email me or call me. I'll be happy to hear from you. Have a great night.